I think that we've delivered a project that is buildable, it's saleable, and I think it's credible. And I think that those are all very important factors. We all know that there's a lot of promoters out there in our industry, but I think that we've generated a feasibility study product that can withstand the scrutiny of anybody who takes a look at it.
Fred, welcome back to Mine Stock Talk. It's great to have you digging deeper into the Vista Gold story with us again. And since your last visit, you've been, let's say, quite busy mining for value at Mount Todd. So fill us in, what's the most exciting development you'd like to unearth for our retail investors today?
Yeah, well, most exciting is yesterday we announced the results of the feasibility study for Mount Todd at a 15,000 ton per day throughput rate. That's resulted in some really tremendous changes in the CapEx, all-in sustaining costs, overall economics of the project, and that's probably the biggest thing that's happened.
Woohoo!
And can you explain, Fred, to the viewers what exactly it is you're doing in the sense of CapEx and what that will mean?
Yeah, so by changing the scale of the project, and we kind of think of it as right sizing the project. We've gone from a 50,000 ton per day operation with the CapEx estimated to be over $1 billion US to a 15,000 ton per day operation, which is a more common size in Australia. By doing that, we've been able to reduce the CapEx by almost 60%, much of it through economies of scale, but also through some strategic decisions like using contract mining instead of an owner-operated fleet.
That's interesting.
That's really interesting. So it means that the project has a greater chance of getting funded, I assume, too, and whether you use a joint venture or you raise capital. Would that make sense?
Absolutely. With an initial CapEx of 425 million now, it's much easier to secure the financing. We've already opened doors and conversations with Australian banks, the Northern Australia Infrastructure Fund. We already have a business relationship with Wheaton Precious Metals in the form of a royalty, but we all know that their real business is streaming. So I think that there's a lot of different avenues that we could pursue should we make the decision to build it ourselves versus a joint venture or another transaction related to the asset.
For anybody who's new to our channel watching and who might not really know a lot about the Vista Gold story, could you just give us the gold nuggets on what makes Mount Todd so special?
Mount Todd is located in the Northern Territory of Australia. Australia is one of the top 3 or 4 mining jurisdictions in the world. It's a large deposit. With the new feasibility study, the new resource estimate, we now report 10.5 million ounces of gold in the ground, the majority of that being in the measured and indicated categories. We have a project that is all of the permits, the major permits are in place for a 50,000 ton per day operation. And so it's well advanced, well located, large size. We understand the geology. It's in a great jurisdiction.
Yeah, it really is in a great jurisdiction. And the last time we spoke with you, which I think is around 7 or 8 or 9 months ago, the stock was around, say, 80 cents. And now it's been up quite a ways. And we're pretty happy about that at around $1.32 as we speak now. And with the new news coming out, do you think that not only will it have an effect on shareholder value, but is there more coming with that and understanding of the feasibility study?
Yeah, we certainly think that this is a key catalyst, that this will be an important driver for value for our shareholders. You know, when we spoke last, we were just talking about undertaking the study and getting it started. And now we've finished the study. We've delivered on all of our key objectives. One was significantly lowering the CapEx. Another was a reserve grade close to 1 gram per ton. And then over the first 15 years of the life of the project, we'll have a grade of 1.04 grams per ton. Life of mine, it's going to be 0.97. So we hit that target, and we also delivered an all-in sustaining cost that's very competitive relative to our peers in Australia. So I think that as people begin to understand the economics and what this means, that and the very strong project economics themselves, that we're very optimistic this is going to drive another step up in our share price.
Of course, the other thing that's helped a lot too, and probably should continue, is the price of gold itself.
Oh, absolutely. We used a $2,500 gold price as the basis for our feasibility study. At that gold price, we have a $1.1 billion net present after tax NPV at a 5% discount rate, and 24.8% IRR. At today's spot price, say roughly $3,300, that NPV doubles. It's 2.2 billion, and the IRR is almost 45%. So gold price is tremendous. I mean, this is a great environment. We think we've been conservative in the price that we chose. Certainly today's gold price only benefits the project and our shareholders.
And I got to guess that that's made people take notice in the market that might be interested in partnership, etc. You must have had fairly numerous contacts over that, I would bet.
Yeah, certainly by using a conservative gold price, leaving the upside there, it demonstrates to people that there's opportunity, that we're not trying to squeeze all of it out in our analysis, but there's upside that they can participate in.
And let me ask you this one question I wondered about when the announcement came out. When you reduce the CapEx by lowering the amount of production you put out, could you in the future change that and raise it again? Is that a possibility?
Absolutely. We did not specifically evaluate an expansion scenario, but in our process plant design and all of our infrastructure and site layout, we have allowed space for an expansion of the project. And so that's certainly an option that could take place at some point in the future. And that decision will be made at the appropriate time once the mine is built. And whether that's a 50% expansion or a doubling of the size of the operation, we've made sure that nothing that we have done in our planning will preclude that in the future.
And also, I wanted to ask you, will you continue to explore on the property?
We're very excited about the exploration potential at Mount Todd. Our drilling program last year added almost 1 million ounces of resource to the project, and we're just still looking inside the boundaries of our mining license. Outside the mining license, we control a little over 1,300 square kilometers of land that covers 2 structural corridors that are known to host gold mineralization, and we've identified a number of targets. Exploration is something that will be ongoing for years into the future.
One of the things that I wanted to know, because of the new study and having it shown 1.1 billion NPV and then 27.8% IRR, there's probably a lot of investors out there that are not familiar with those type of metrics. So could you just break down what they mean in plain English?
The net present value is really nothing more than taking the series of future payments and then discounting them at some interest rate to determine what they're worth today. $100 10 years from now isn't worth $100 today. It's probably only worth $60 or $70 today. And so what we're doing is trying to say, what is the value of the project, taking into consideration the total life of the project? Unfortunately, we as an industry, almost everyone uses 5%. It's great for investors and shareholders because it makes different projects comparable. But to be more honest, we should be using a cost of capital. What is the respective cost of capital for every company? And that should be our discount rate. So that's a little bit of a misleading factor because none of us, except for maybe the senior producers, can borrow money at 5%. That's just the reality.
Why 5%?
Well, it's kind of a historic number. Quite honestly, I've been in this business now for almost 40 years, and we've been using 5% the whole time. Like I said, there is an advantage in that when everybody uses the same discount rate, it makes projects comparable on an apples to apples basis. The other number we talk about is the IRR, which is the internal rate of return. And that's simply saying, if we invest the $425 million that it takes to build the project and then fund sustaining capital out of cash flows, at the end of the day, what is the return on our investment? It's simply a metric of being able to compare the value of one investment versus another on a simple return basis. And so that's another factor that allows us to compare one project to another, taking in one number, taking into consideration what may be tremendous cash flows early or late or spread out over a long period of time, and looking at it, what is it worth today basis.
The fact that you've changed the CapEx on the project and it can work at the size you've made a decision at, is that going to make raising the capital fundamentally easier? And how is it looking? And what are the sort of the conditions out there in the marketplace to actually raise the money?
Yeah, well, just on a generic basis, raising 400 million is a lot easier than raising $1 billion. That's the bottom line. Fundamentally, it's easier. Typically, projects like the Mount Todd project are built with a combination of debt and equity financing. And the debt side depends on the economics of the project and how robust it is. We think that Mount Todd could actually carry something on the order of maybe as high as 70% debt. The economics are that robust. We wouldn't advise that. We would look at maybe 55 or 60% debt, the rest in equity. We think that the debt side of it will not be horribly difficult to obtain. The equity side of it, that will be a different story, and we'll have to get a little bit farther down the track. But in saying that, I come back to the optionality. It may not be Vista Gold that's raising that money. It may be a joint venture. It may be that there's a mining company out there that, with these new results, likes what they see in Mount Todd, but doesn't want to be a partner, and they would rather acquire the project and build it themselves, somewhat like what Northern Star did in acquiring De Grey's. That's a possibility, and if we can do that in a way that creates value for shareholders, it's on the table.
So all those options are open. And right now, how does the company stand with having cash to continue operating, or is there a raise in the works or in the thoughts at this time?
We'll be publishing second quarter financials here in the next couple of weeks, but we ended the first quarter of the year with $16 million in cash. We typically spend about $1.5 million a quarter. Obviously, we're paying for the feasibility study. I think it's probably fair to say that we'll end up somewhere around the $12 million mark at the end of the second quarter, with most of the feasibility study costs already paid. We certainly have the money to continue the work that we need to do as we try to increase the broader awareness of Mount Todd and begin to evaluate, what the next steps are without having to go to the market. But inevitably, sometime in the next 12 months, there will be some sort of financing.
Mount Todd obviously sits in a really great rock solid jurisdiction in Australia. So can you just give us a sense of how this gives Vista an edge over projects that would, say, maybe be in much riskier regions?
When you talk about real estate, they say the three keys are location, location, location. Yeah. And that's certainly the way it is in developing mines. When you start looking at risk profiles, countries that have stable governments, that have well-established mining laws, that have well-established ownership of minerals and the right to develop it, those factors become very, very important. And it makes it easier, one, to borrow money to develop a project. You can get cheaper money, lower interest rate money when you're in a safer jurisdiction. Certainly where there's a tradition of mining and the regulations are well established and it's understood what's required to get permits, that oftentimes shortens the process, not always, but it provides a more sure outcome, knowing that if you follow the steps, that you will ultimately get to the objective that you want. Also, being in a jurisdiction where they already have mining activities, you're far less likely to encounter opposition from local stakeholders. Australia is a resource exporting country. They understand mining. They depend on mining. The average person in Australia invests in mining, and so that helps as well. That there's that kind of that grassroots support for the industry. All of those factors make it easier for companies to explore, to develop, and ultimately build and operate. And I guess the other thing is that just the workforce itself. You know, when you have a stable mining driven economy, there's people that you can employ that have the skill sets that you need to operate.
It sounds like you guys have it well organized at this point, given the fact too that you've changed, say, the CapEx approach that you're taking. And so for the rest of the year and going into 26, what do you think investors, especially retail investors like ourselves, what should we be looking for?
Our activities over the next 8 to 12 weeks are going to be entirely focused on helping increase the broader understanding of the Mount Todd project. Doug Tobler, our CFO, and I will be at Diggers and Dealers, one of the premier mining conferences in Australia next week. And we'll be meeting with a number of people. We'll be attending conferences in Colorado in September. As far as new news, unless there's a transaction that materializes in the very near future, there's probably not going to be a lot of splashy news. I mean, it's going to be now down in the trenches, meeting with the CEOs, talking to companies that we think are very likely, you know, partners or transaction candidates. We've already signed a number of confidentiality agreements. I expect that in the coming weeks we'll be signing a number of more. We expect that a number of those will translate into site visits and discussions, and so there's a lot of now that we've made the announcement, there's a lot of behind the scenes hard work that needs to be done, and that's what we're gearing up for right now.
In closing thoughts, Fred, and as we wrap up, are there any final golden thoughts for investors, our investor audience, I should say, that would be considering Vista Gold?
It's important in our industry to tell people what you're going to do, and then hit your mark. And you know, a lot of people talk, but when you're able to walk the walk, I think it's a completely different story. And what I would leave people with is that we set out to significantly reduce the capital of the project. We achieved that by right sizing the operation. We set out to raise the grade. You know, we felt that some number of ounces at a grade of a gram per ton was more valuable than 7 million ounces at 0.77. And so now we have 5.3 million ounce reserve at 0.97 grams per ton life of mine. I think that's another significant objective. We used a group of consultants that they're just well experienced. They have great track records. Many of them are based in Australia. GRES, the study author, has a track record of building gold mines of this scale in Western Australia. And we've leveraged their experience in generating this feasibility study. I think that both the CapEx and our all-in sustaining cost number, which is roughly $14.50 an ounce for the first 15 years, are very credible numbers. I mean, they're built from first principles, but I think that they're numbers that when people look at it, they'll say, you know, these match our expectations. And so I think that we've delivered a project that is buildable, it's saleable, and I think it's credible. And I think that those are all very important factors. We all know that there's a lot of promoters out there in our industry, but I think that we've generated a feasibility study product that can withstand the scrutiny of anybody who takes a look at Mount Todd.
I have to say that your feasibility study, as we've gone through it, and we've been shareholders for a while now, looks really good to us. I love the approach. It's created a spot where I believe the stock, which of course we care about a lot, is in a nice pattern at this point. Great spot for people to jump in and take the time to understand the study and where that puts the project. And again, as you've described before to us, and even now, how excellent an area it is, and what a project it'll be moving forward. So we really appreciate it that you've updated us on that. And we will, as well as you are doing, try to point out to people just how important this study is and what it'll mean for the stock.
Calling all savvy investors in mining and resources, seeking the inside track on Vista Gold? Look no further than minestalkers.com for cutting-edge knowledge and real-time stock updates. Visit for the insights and stay for the gains. Seize the opportunity and explore the magic at minestalkers.com. Uncover new investment possibilities today. Don't forget to hit the bell below to subscribe and then like and share this video. Let's get the word out there.